Hello guys, welcome to a Trading Parrot. With less than an hour from the unemployment rate meeting and with retail already front-running the move by selling at a loss and running in panic, in today's video we're going to focus on the opportunity that could create in the market. I finally could get my hand on a professional account on CryptoQuant, so we're going to do a sneak peek into these charts that I found doing some initial research, and of course we're going to cover this move that we are currently having towards 95k. I'll give you an update when it comes to comparing 2025 with 2021. We'll look into the 4-hour time frame. What does it mean recovering in here, this line of support, and what could come next, and a potential double bottom formation on the daily, which is also very interesting to see. We'll cover this CME gap that we have above the price as well, and of course all the usual information, including liquidation levels to watch, what's currently happening on the order book, and all of that. Guys, if you like this type of content, make sure that you're subscribed to the Coin Bureau Trading channel. With Dan and Aaron, we are committed to publish value content for traders, educational, and setups as well. And if you want to stay on top of the price with my analysis as well, make sure that you subscribe to the Trading Parrot channel. I publish daily videos covering primarily Bitcoin and altcoins, looking at all sources of data and explaining each and every alpha. So as I mentioned in today's video, I want to focus on how much retail has stepped back in this move from 108k towards the low 90s. This is something that we've been monitoring only by looking at Google Trends and seeing a reflection in the price. But I want to cover a few indicators that are showing not just that retail is not searching on Google for Bitcoin, but also they are selling at a loss. We're going to look at the long-term holders, what they're doing at the same time. Typically they do the opposite, and we care about this information because this provides incredible buying opportunities. Whenever there are sources of fear and retail ends up giving up, the combination of those two things tend to have a very strong impact in the market, most of the times producing a reversal. Nothing is guaranteed, this is not financial advice, but stick around until the end of the video and let's look at all this data together, and hopefully it's going to help you navigate the markets a lot better. I was watching a video from Benjamin Cowen this morning. I have quite a strong flu, if you notice by my voice, so I took it easy. I was having breakfast and watching the preparation for the reports of the unemployment rates, and I'm always impressed by how much memory Benjamin has. He remembers every date in the past 2 years that we have had an unemployment rate report, and without looking at anything, he pinpointed in the chart every time there was a report. And pretty much every time there was a report, the price was at a high like this, and it ended up reversing to the downside. In this case, we are at a low, and one thing that became evident after watching his video is that more or less every time that you get a report, or 90% of the time, whichever direction the price is going, it tends to reverse where it came from. And although January is calling for a potential breakdown somewhere in between the 91k and the bull market support band, or even lower, you can watch my video in the Trading Parrot called January Analysis, where I spent half an hour reviewing the past performance of each individual January at this time in the cycle, together with the one we had 1 year ago. We find all the patterns, and it's very typical, just in a nutshell, to start January with a top and then find a bottom somewhere by the end of January. In this cycle, we found this top a little bit earlier, indeed 2 weeks earlier in the middle of December, and we are at the moment on the lookout for a bottom. So if this was 2 weeks earlier, we should be looking into a bottoming pattern within the next week, in the next candle on the weekly, to be more precise. That is assuming that we are still gonna respect the timing, not just of the top, but also of the bottom. All previous cycles, the bottom was by the end of January, which could stretch this a little bit further. Let's look at the daily time frame, and I'm gonna hide the CPR to make things a bit more easy to read. On the left hand side we have 2024, right hand side we have 2021, and I'm comparing January against January. And you can see we have this high in here, and I'm speculating that we are gonna get something similar, which is an ABC correction from Elliott Waves. And as you can see, in 2021 we found support more or less at the extension of Fibonacci 1, meaning that this leg into A was the same length as B to C. But there's something very important to notice. Not all ABC corrections go into an extension of 1. Indeed, many of them manage to get to 1618. But obviously in 2021, that's not what we did. We ended up having a shallower correction into just 28.6K. So if this year we were to have something similar, that will match more or less with 86K towards 89K. So all this bucket in there will more or less give you a similar performance that in 2021 relative to the moves of this particular year. Now, something I didn't cover in the January analysis video is what will happen if my BC was to reach the 1618, which theoretically is still possible. At that point, you will reach 75K. 75K is pretty much the target of the head and shoulders, right? There is a confluence towards that, and that will mean that the head and shoulders is actually playing out. And that's why I have spread my orders covering both scenarios. Scenario 1, we get a spring somewhere between 89 to 85, and I fill my second order. Remember, my first order at 91.8 has already been filled. It's a low volume one, and I'm still riding it. At the moment, slightly in profit once again, but when we were below support, it was a little bit at a loss. The intention is to let the price go into this bucket and add more, assuming that we get something similar to 2021. But if we don't get that and we go beyond, we could get to the full target of 75K. Notice as well that as opposed to what we were seeing in 2021, yesterday we confirmed the MACD bearish cross. I'm going to magnify it so you can see it. So on the closing of the price, you can see in here on Thursday is confirmed, and that is the third bearish cross that we had. This was slightly above the zero line. So I'm really hoping that MACD is somewhere in here, does a bull cross, and we start reversing back to the upside, finding some sort of bottom information on the daily MACD. On the 4 hour, I want to make you aware that there is a tough resistance at the moment. So this move in here that is bouncing off support at 91.2 that has moved towards the 95, it is currently confronting 96.2. And that is from this line that was resistance there, resistance, resistance, support, support. We couldn't hold on the 7th of January and we broke to the next level. The second indicator showing confluence of that 96.2 being a strong level of resistance is if we connect these two pivots in there and we have this line as a resistance on the RSI, you're going to notice that somewhere around 52, 53, in here, there is the resistance from the trend line on the RSI 4 hour. So if this is 52, that will be more or less 96K. If it is 53, it's 96.2. So pretty much somewhere around there in the price corresponds with this line, and it's the first time that we confront resistance. In this case, is actually global resistance. It will be local if I place a line like this and I call for a breakout a little bit earlier, but I wanted to stay away from calling that level too early. And I think if we reach that 96.2 and it plays out in the most typical way, the first time that you hit resistance, you see as rejection. That rejection can be a higher low, ideally, and then you break out in there. Or if we were to go to that 75K, that rejection should potentially even break that level statistical coming from PNR that has provided support on the 4-hour RSI so far. In that case, we could be pinching that and having that fall not just to the target of 75K, but actually there is this incentive in here of the CME gap from 77.5 to 81.2. Now that we touch CME gaps, we have one at 97.1, and you might be thinking, well, that's beyond the resistance. You were talking about 96.2. Yes, but this is CME price, and it's typically somewhere around 1K or a little bit less of a gap. There is a premium on CME prices. You always have to consider that. For example, you can see that the CME gap more or less corresponds with these levels of support in there, which are located right here and right there on the 4-hour time frame. So more or less, the CME gap is located at that resistance. And one thing that I'm keeping an eye for is if this rallies just to fill the gap here, and then after the unemployment rate news goes out, this could fall either to our 88 to 89 or maybe to the CME gap. We are seeing a fear and greed index value today of 50 for the first time in many days. We entered the neutral, leaving behind levels of greed. And I think it's definitely worth comparing what we are currently doing at this time in the market as well relative to the past cycle. Let's have a look at what has happened in the past months. You can see that we were flipping between greed and extreme levels of greed starting from mid-October, and now in early January we broke down finally to a level of 50, which represents neutral. Going back in time, if we compare that with what happened at the same time in the previous cycle, you can tell that late 2020 we were doing precisely the same, being at extreme levels of greed, and eventually in late January the index went all the way to 40, 10 points lower than where we are. A reminder from what I said earlier, in 2024, the peak was in December, mid-December, whereas the price in 2021 peaked in early January, 2 weeks after of what we see in this cycle. So this bottoming move into the 40s that happens late in January, it's also being seen around 2 weeks earlier as well, matching this hypothesis that we are experiencing things with a shift of 2 weeks. Now let's look at what happens after that first pinch into the neutral in January by the end of the month. Well, from there, we spent very little time there, pretty much 1 or 2 days in the neutral, and then we skyrocket once again mid-February into 95 to levels of extreme greed. After that, we see a decline that rallies back down into the summer to levels of fear and extreme fear. So although this cannot be used really to forecast the precise levels of prices that we can reach, neither if this is an actual bottom with a level of 50 and we might go to 40 or 30, assuming that the levels of fear and greed this cycle are also a little bit shift down as a consequence of the rally moving up so quickly relative to what we did the previous cycle. But the beauty of doing this analysis is that it gives us some sort of template of what to expect in terms of direction and timing. And if this matches the previous cycle, we should be expecting that we are close to some bottoming that should last very little, and that then we should have some sort of bounce once again into the grid. We'll see if we get that, but I think it's worth noting. As I mentioned in the beginning of the video, I'm quite interested in this hypothesis that retail is selling at a loss very fastly after having bought heck of a lot of Bitcoin in here, and during this move up, they've been realizing heavy losses. And that's what the SOPR is telling us in this end of the band, which typically flags that we are very close to levels of opportunity. You can see that the SOPR prints an S every time that we pinch the lower band in green, or in blue if we pinch the top band in here. I have both implemented a slow and a fast band, and I like visualizing the SOPR in this manner, both to find great entry opportunities in different markets, but also to de-risk as we are going up at times where people are selling in profits. You can see that something very similar applies to Ethereum with opportunities to buy, and at the moment Ethereum is very close to the first band, which could print a blue signal somewhere in here. So now that I have access to CryptoQuant professional account, I'm very happy, and I started researching different authors. This one is called Axel Adler Jr., and I borrow 4 of his charts, and I'm gonna cover 3 of them in today's video, which belong to his collection of finding tops and bottoms, which I find fascinating and I want to share with you guys. The first one is called the Retail Investor with a volume of 0 to 10K by USD, demand 30-day change. What this means is how much pretty much retail wants to acquire Bitcoin at different times in the market. Areas that are too high in the green are areas where retail is buying heavily, and this fits our narrative earlier in the video that around 100 to 108K retail was buying like mental. And I was not wrong, because this high of almost 32% is higher almost than ever in all this area that spans up until January of 2020. But not only that, but retail was extremely greedy above 100K. They act like if they were tourists And as soon as they saw some sort of FUD in the market or possibly some bearish technicals, they went completely in the other direction to minus 21%. And what we have seen in the past month with retail has been the most extreme flip of sentiment from retail investors in the past 4 years. You're gonna struggle to find in this range ever a time when they were so bullish and then that they were so bearish. So this highlights to me opportunity, because if you focus on all the areas where retail loses their interest, that is typically when the price starts rallying again. You can find that happening almost at the bottom in 2021 and also in all these areas in here. And once again, that bottom at the moment is minus 21%. This one is minus 23%. So in my opinion, I wouldn't like to be empty-handed with this indicator like this. And that's why I'm already rallying with one order and hoping to feel more if we wick down below the 90k. Second indicator is based on open interest, and if you've been watching my channel, you know I love paying attention to open interest. In this case, we're gonna visualize it as an oscillator from tops of blue into bottoms in red. There are two lines, the high and the low, blue and orange, and it's very simple to interpret. If you are below the orange, you are very close to a bottom. This particular indicator still says that there is some downside because we are halfway through towards the orange. The next indicator, which also calls for tops and bottoms, is a ratio between the BTC price and the USDT market cap, specifically the last 30-day change. And by doing that ratio, we can highlight areas where things go too heavy into the market capitalization of USDT. That means that people are selling everything and that there's very little relative investment into Bitcoin at that point in time in the past 30 days in the market. We can see that from 2022, we get that as a very extreme level in orange around the FTX collapse. Then we get another depression in this correction in 2023 in August. And then we have some humble corrections, one at 57k and the one that we are currently having. So things that we can rescue from this is that you can go into the orange a lot lower in a bear market. That is the final capitulation. So I wouldn't necessarily expect the orange to go that deep as if FTX went bankrupt, but we should be expecting somewhere between what we have currently, which is slightly in the negative, and potentially getting into a level of minus 1.2%. I'm gonna keep this tab as my arsenal of alpha, and I will continue researching new alpha from CryptoQuant. If you have anything that you would like to share and I can show in the channel from CryptoQuant, let me know. Sometimes people share things on Twitter and I can find them, copy them into my account and keep an eye on them. Very quickly, let's look at the levels, because people never forgive me if I forget doing so. It's very important, I think. Just in any order, we are going to look now at the fair value gaps. You can see towards 105, there is plenty of fair value gaps to consume. This doesn't mean that they are guaranteed, but those are great areas to target if you're going to do a swing trade. There's a vacuum from 91 into 85. That is something I mention all the time. Now we find some fair value gaps below the price thanks to this move from 91 into 95. Liquidation levels, let's see what we are hitting at the moment. Larger ones from the last 30 days continue to be on the upside, and that 103 is very important, the most significant one. You can tell that we are fulfilling this idea that the delta longs and shorts is going on the way towards the bottoming in here to find the final stop. We say that in this area in here, we're going to be looking for further longs. It has been an incredible alpha to swing trade each and every time we get to the bottom of that band. And it's pretty cool that finally we are not at the top of this band, which tends to align with each and every local top as well. Yesterday, I was sharing this level of liquidations in my social network, Telegram, Instagram, and Twitter, and I was making sure that you are aware of the levels of highest liquidity in the short term. And you can tell that at the time I shared this, there was this big chunk in there, and that big chunk got hit. And thanks to that larger liquidation, the price bounced back up, but there's still plenty from 91 into 89k on the shorter term. On the longer term, we never managed so far to go to 89 to 87.5, but we are starting to consume the green. Next, there is the yellow and then the red if we were to go to those levels. Hopefully, because I have an order there and I'm looking forward to fill it. Yesterday I was talking about the bid increasing as the price comes back down, and at the point it reached these highs, we started seeing the green lines that I have with my own thresholds, and that was the point the price started reversing almost 4%. At the moment it's 130, so probably we get now the unemployment rate is 4.1, which is less than the forecast. That is obviously less unemployment than what people were expecting, and it pushes away the chances of needing to reduce interest rates, which possibly is going to spook the markets, and it could have a shake of volatility the rest of today. The order book shows an intense interest in the areas we were talking about, from 90 to 87.7, and I'm going to leave it here and wrap up, which is something that you guys always appreciate, to condense all the data I have given you into how I interpret it and what am I gonna do with that. Of course, do your own research and decide for yourself. This is my trading style and it fits my needs, my risk aversion. Make sure you do your own. So at the moment I have this order at 91.8 and I'm looking forward to see a potential spring into this area, expecting some move up, but I am prepared to be wrong and not have the performance that we saw in 2021. At this time in the market we are way beyond in terms of performance. We have made it already to 108k thanks to the ETFs and institutional interest, whereas in here we were just getting started. So potentially we need to be prepared for further downside in this correction and not be caught by surprise. Multiple reasons for that is that the ABC correction could hit the 1618. We could fulfill the full target of the head and shoulders and get to 75 as well, or we could come back once again to the scene of the crime if we see a deeper correction in general markets. So it's definitely worth taking it calm in here and looking for better opportunities, particularly considering we are at 80 on the CVBI index, which means that we are well ahead towards a peak in the market. If we were in levels of lower risk, my approach will be completely more degen. Indeed, at 15k I bought tons in Bitcoin, but when I bought for the breakout of the megaphone pattern, I was way more conservative, assuming that we were already 60% at that time ahead in the market. Let me know what you think is going to be the reaction with the unemployment rate, and if you think that other aspects like the government in US selling so much Bitcoin is actually going to play out and cause a deeper correction. Guys, if you want to trade with an awesome exchange, I recommend Bybit and OKX. Both of them offer incredible bonuses and discounts on trading fees. You can find the links in the description, and if you want to stay away from KYC, at the moment my choice is to use 2bit. This exchange offers a very similar user experience as Bybit because it was built by the same people, currently offering a 9k bonus and 40% fee discounts. In order to claim these benefits, use the links down in the description. I'll see you in the next one. Bye bye.